Hello, everyone. Joshua Hayes at BigWaveTrading.com. What an exciting, eventful week it was. A little bit of some weird data coming through. The AAII survey showing 60% bears, which is historically you're nearing a bottom or are at a bottom whenever that's at that level, unless you're in a bear market, like in 2008 when we had it, and we still had to go down to the lows in 2009 before we bottomed. We got 60% then at 2008 before the bottom, 60% at the bottom. So unless this is 2008, we should be near bottom based on that survey. However, the put call ratio 1 month average shows that everybody's still bullish. The VIX didn't really spike with that 60% reading, which I personally have never seen before. And on top of that, we had the NAAIM numbers come out, still showing around 80% long. So it's not completely in alignment. We have extreme fear in the seen ingredient fear index. But the bottom line is, all that matters to me is price. Price is what moves our profit and loss statements. Price is what affects our account balances. So that's all that matters. That being said, excellent undercut and rally session today in the QQQ and the SPY. We opened, took out the lows, and we had a strong close. Now, great day one of a rally attempt, but it's nothing more, nothing less. It's an excellent day one of a rally attempt. But if we want to get a clear picture of where we're at structure-wise, this tickets indicator that we have, that we created, which is basically a stair-stepping form of the moving average convergence divergence, is below the zero line. When we're below the zero line, it's not going to be smooth sailing. Doesn't mean it can't be smooth sailing, but it's always better when you're above the line. This is when the quote easy money is made in the market. There's no such thing, but easier than when it is below the zero line. And on top of that, we have the TSV below zero. So that's the QQQ. If you look at the SPY, same situation. We're still below the zero line there. We're still below the zero line in the TSV. Double red. And of course, with the IWM, we're double red, and the DIA, we're double red, but this is holding up better than the rest. Still, that being said, a very good day one of a new rally attempt. Look at the volume on today's session in the SPY. Excellent. DIA, heavier than the day before. IWM, heavier than the day before. QQQ, a little bit lower, but still, we're holding at that 200 SMA so far for the QQQ. And then, just to prove a point, it's not all dire out there, guys. I still have a lot of good-looking stocks I'm watching. LRN, which is actually in my tight daily squeeze scan, which is funny. There's only 4 stocks in that scan, only 4 stocks in the weekly squeeze scan. LRN happens to be in the daily one. You can see how well it's holding up. And then my favorite stock right now, WGS, which I kind of need either a pocket pivot point signal while it's extended from the 50 SMA and the 21 EMA, which is not shown in this chart. I can't cheat an entry in this market without one, but this is by far my favorite stock in the stock market right now with the setup. But you can see how good that base looks. And by the way, WGS is in my weekly squeeze scan. So we have LRN, WGS, my favorite sector, growth sector, insurance stocks. In fact, I only had one new long this week, and that was AXS on Monday. That was it. I didn't have any other long positions this week. Think about what the market did this week. How did we do? Our long position is doing well. This week, it was up 4%. What did the SPY do this week? Well, it says down 1%. Let me move that forward one day. Down 0.5%. So you can see we had outperformance there. But insurance stocks are definitely my favorite growth sector. Look at the earnings and sales growth these stocks are putting up. And I don't see this changing anytime soon. So this is actually one of my favorite new growth sectors based on the actual factual data of earnings per share growth and sales growth. But PLMR is in there. TDY. Look at how good this stock looks. What pullback? And then if you want another sector that's strong, look at BK. By the way, the golden age is here if you're a European bank. Pretty impressive overall move there. But that being said, XLF What market pullback? Look at that relative strength line. New highs. Where should we be focused on if we have a follow through day? Banks and insurance stocks. And I do have one new long position this evening in a bank stock or in an insurance stock with amazing fundamental growth, and it has over 10% short flow. But first, let's run through these. MasterCard and Visa. These two are in my long term portfolio. I wonder why. Do you really think anybody's ever going to get away from credit card debt? I don't, so that's why I'm long these two names. Gill, looking strong. TW, looking strong. The relative strength line is really caught up. Flagged this stock yesterday. More follow through today following its earnings report. Costco still looks fine. PRCH, a small cap name or mid cap name, small price, lower price name, I should say, looking fine. How about that volume on TTC off the lows? Just to show you that there is some major players coming in, finding support at some of these levels. HVT is another one that gapped up, and I like the way that's acting off the lows, higher price. So there's still plenty of stocks out there that are looking good. It's just not in the hot sectors that we really want to see lead for explosive gains in the stock market. Stocks like Palantir, Nvidia, AVGO, CRM, Now, Snow, stocks like that. We don't have those leading right now. But that being said, it's hard to get away from the KIE insurance ETF and the XLF. Those are our leaders. That's the area that I'm really focused on right now. So that being said, I have a new long signal this evening for Monday. Goosehead. Goosehead joins my insurance names that I'm watching, and there's multiple guys. BRO is just one leader that I have in my long-term portfolio, but I botched with the swing signal. I could have taken it on this day, and I passed on it because of that below average volume. So much for that. But that being said, insurance stocks, insurance stocks, insurance stock, and Goosehead is an earnings winner, 10% short float, amazing earnings and sales growth, amazing estimates going forward. So right now in this tape, I'm not willing to take anything extended from the 50 SMA unless it's not extended from the 21 EMA. And if you look at here, you can see where the 21 EMA is at. It's extended from the 21 EMA and the 50 SMA. So why am I going long? Well, first off, I told you that I wouldn't go long WGS despite a very similar setup to Goosehead because it is extended from the 21 EMA and 50 SMA. But I told you guys, if I get a pocket pivot point signal, I'll go long. Goosehead has given me that pocket pivot point signal, heaviest volume, heavier volume than any down volume day the past 10 sessions, gives me a pocket pivot point signal. Nice undercut and rally. I mean, we really flushed it today and we rallied and we're holding the earnings gap up low. So I like Goosehead. I like insurance stocks. I like this chart. Weekly chart is very clean as well. I see a big, giant cup and handle forming. Could be a little bit excessive, but still, it's a good setup nonetheless. So I want to get long Goosehead above 123.22. I personally don't want to pay more than 123.50 for it, so that will be my limit offset to my buy stop order at Interactive Brokers. And I'm willing to risk to this low, and I'll calculate my size from there, and I'm willing to risk a full I think a full 2R on this trade. So I'm actually going to go 2R of my portfolio at risk in this trade. If it triggers and fills on Monday, basically about 40% of my account capital in this swing position account will go into this one stock. And that's why I was telling everybody in the chat room today after hours, if I get 4 or 5 signals today that are like Goosehead, I just go from basically no size in any long position besides AXS to fully invested in one day. If I continue to get more of these setups and we have a follow through day, I'll be 100% long right after being just yesterday about 10% long because I've been taking profits on AXS on the way up because of the overall market. So with that being said, let's take one final look at these charts. This is my daily squeeze scan. LPLA is a little choppy, but it is right at the 21 EMA. You could easily take this trade above today's high of the day, risking to this low. But to me, it's not in the proper consolidation. LRN is. LRN is right at the 21. I might even consider this as a trade above the high of the day, risking and calculating my size of this low. And then UTI is in there. UTI has gotten a bit sloppy, so I really wouldn't consider it. But that's the only 3 stocks in there. And there should be only 3 stocks in here, but I don't have an average volume requirement for this one, but Torx F made it. But there's WGS, there's PAAS, there's USM. USM has a nice move higher on the weekly time frame for my setup, but the moving average stacks aren't proper. The same with PAAS, not enough of a move. The only correct stock in here is WGS. WGS has the proper uptrend, doesn't have enough of the moving averages that I like to see, but it is in my weekly squeeze scan. So WGS is there. So I wanted to show everyone that before I wrapped up this video lesson. So I hope you guys did well this week. Hope you protected your capital. We've been saying cash is king for a while. Our warning signs that the market was going to pull back is that ever since this day right here, despite us moving up in the market and doing basically a fake out breakout, each and every week, the most signals I would get per day would be 1. I don't think there was a single day from here to here where I got more than 1 quality long signal per day, and we had multiple days where we had no new long signals. Compare that to this entire move off the 2002 lows, where there were days where I had 5 signals, 4 signals every day for the full week. And then we start having 1, 0, 0, 0, 0, 1 this week, 1 on Monday, 0 on Tuesday, 0 on Wednesday, 0 on Thursday, 1 on Friday. The one on Monday and Friday, insurance stocks. So tell me, do you think the market's going to continue to sell off, or is it finally a bottom? Or are we just going to chop around? I think by the end of the year, we're at new all-time highs. Let me know if you agree or don't.